Welcome back to another episode of the Long Game Podcast. Today, I'm your new host Ming, and we have with us Mr. Alan In Wei Loon, who's the Deputy CEO of CGS-CIMB Malaysia, to be with us to talk about the Madani Economy Framework and how it will spur the economy to drive more significant industry growth and improve the livelihoods of Malaysians. So, Alan, thanks for being on the show with us today.
Hey, thanks for having me here. Pleasure to be here and looking forward to have this conversation.
Yeah, very glad to have you. So usually we just jump straight into the questions since the podcast is pretty short. So we won't talk about the framework itself and just jump straight in to the first question, which is, do you think that the Madani framework sufficiently addresses the issues of raising Malaysia's GDP to be above that of its Southeast Asian peers, as well as enlarging the wealth of its people? If so, how? If not, what are some of the gaps that you think need to be addressed?
I think the Madani framework is a very good attempt by the present government to address some of the structural issues that the country has been facing for quite a number of years now. I understand the emphasis is on restructuring the economy to grow the country's wealth and at the same time to ensure social justice so that the wealth can be distributed equitably among the rakyat. So among the initiatives, the key pillar is to raise the ceiling and to raise the floor so that the framework would allow for the economy pie to grow and at the same time to spread that out to the rakyat. Now, if you look at the size of the Malaysia economy at this present moment, it is currently at about 330 billion US dollars in terms of the annual GDP. We are currently at about number 37 globally in terms of the ranking by economic size. And if you compare ourselves to our neighbors like Thailand, Indonesia, Vietnam, and Singapore, even Vietnam has grown quite a fair bit, and their size now is equivalent to Malaysia. We don't unfortunately have the advantage of a very big population compared to our neighbors like Thailand, Vietnam, and of course Indonesia. So we have to do our game quite differently. So in terms of the Madani framework, I understand that apart from raising the ceiling and raising the floor, the key pillar is also to increase productivity. So I think in terms of the gaps that we need to cover here, it is clearly to grow our economy at a faster rate. So if you look at the historical growth rates of Malaysia's GDP growth, it has actually been trending downwards in the last 30 years. So I started in this industry in the 90s. So I was fortunate to see the kind of growth that we had then in the order of 8% per annum. And we trended down to 6%, then down to 5% in the pre-COVID days, and right now it looks like we are trending towards the 4% level. And in fact, IMF is saying that we could be looking at about 3.7% GDP growth in the next few years post-COVID. So in our situation, I know that Madani is targeting a 5.5% to 6% growth, and therefore, to get to that level, which is a gap, an increase in gap, or rather, there's a gap of about 2% between 4% and 6%, the aspiration target. That would require us to be a lot more productive. Just my final point there before I take a pause and pass back to Ming is that if you look at the economy, the growth has largely been driven by consumption growth in the last 10 to 15 years. The exports, unfortunately, in recent times have moderated somewhat, and our exports as a percentage of GDP has also moderated to a lower level over the last 10 to 15 years. The one that we could grow a lot faster is in the area of investment. So investment as a proportion of GDP is running at about 20 odd percent. That compares to 30% to 35% for Indonesia. Same level for Vietnam as well. Even Thailand is running at a higher rate as a proportion of GDP at about 25 to 30%. So Malaysia's at 20%. Average the last 20 years has been about 25 to 30%. So it's trended down. And the key now is to get the investment growth upwards. And by doing that, with productivity as well, productivity gain, our GDP growth can go up to the 6% level. It is going to be a tall order, not easy. A lot of things that need to be done to bring more investments into the country. And I can certainly cover some of those measures that can be taken later.
Yep. I think very, very importantly also in the Madani framework is that I think one of the focus that the government wanted to emphasize on was on the domestic investments, right? In addition to just attracting foreign investments. Do you think in the current state that we are, is it a problem of there being a lack of opportunities in the country for investments, or is it a lack of confidence in the economy? Because we do have a lot of, you mentioned we are in the top 40 GDP wise in the world, which actually is no small feat, right? It actually puts us in the top, somewhere in the top quartile of the world.
But we're trying to get to top 30 in the Madani framework by in 10 years' time.
Yep. Well, what do you think the cause of this lack of investments is? Or rather the declining
it's a
rate
very
of
good
investment?
question, actually. So since the Asian crisis in 1998, our domestic investment level has been trending down. If you look at the recent foreign investment or FDIs into Malaysia, we are running at about 10 billion US dollars, depending on what data you look at. And if you compare that to, for example, Vietnam is 15 billion US dollars. We are 10. And even Indonesia is running at double that, which is 20 billion US dollars. So we've not been getting as much FDIs compared to our neighboring countries. Of course, domestic investment is the other important source of investment, right, to grow the economy. And when we speak to some of our corporate clients, we hear certain comments like, sure, they can bring their funds or their investments back from overseas into Malaysia. What do I invest in? That's the common question asked, right? And so I think a few things need to be looked into. Number one, the political and the investment climate needs to be supportive of new investments. Secondly, the environment also needs to support. The environment also needs to support the building up of ecosystems in either new industries that we're trying to get into, or the deepening of ecosystems in our existing industries, like, for example, semicon, which is a very big industry of Malaysia, right? So when I talk about ecosystem, I mean basically the vertical integration of various players to basically produce a service or a product. And that in itself requires different players coming in. We need diversity. We need, for example, relook at our immigration policies, obviously our investment policies with regards to getting foreign investments in where we don't have the technology and the know-how. Then with that partnership with the domestic players, you create an ecosystem. So right now, Malaysia is obviously strong in ecosystems or industries such as semicon, plantations, oil and gas. But if we want to move into new areas like AI or EV, what do we do? So that is the second point that I'm touching on. The third is fundraising for such investments. So we all know that the government's fiscal position has been challenged, to say the least, and there won't be a lot of funds coming through the government side, and that's where the private sector needs to come up with the funding, right? So if you look at how Bursa Malaysia has performed, for example, I think most people from my industry would agree that it has actually underperformed quite a fair bit in terms of the performance of the stocks listed on Bursa Malaysia vis-a-vis markets like the US, even vis-a-vis regional markets. Even in the IPO fundraising space on Bursa, it also hasn't been that great. So to my point there on Bursa, can we look at making Bursa a hub for ASEAN listing? So we all know that there is a confluence of factors which could create an ASEAN era, so to speak, from geopolitics, concerns between the US and China, and ASEAN is a neutral region in the right location. There will be a lot of companies basically looking for growth opportunities in ASEAN, new and existing companies, and there will be a lot of demand for funds, private capital. Can we raise some of this in Malaysia from Bursa for Malaysian companies wanting to expand into ASEAN, as well as for non-Malaysian companies that do business in ASEAN to be located on Bursa? So if we can create this, we can then talk to our Malaysian companies, Malaysian businessmen and women to bring their funds back into Malaysia to invest in such companies, right? And then of course we can then go and talk to institutional funds, including the GLICs, the government-linked investment funds, to bring more of their investments from outside Malaysia back into Malaysia to basically fund this opportunity. So there's a lot that we can do. So if you can get this going, you can then fire up the investment part of the GDP equation, and we can then hit towards potentially the 5.5% to the 6% level.
Thanks for that. I think in relation to that, also perhaps maybe taking a look more at the tax and the incentives that are being planned out as part of the framework. What are your views in terms of whether these tax incentives and financial plans are able to help shape the Malaysian economy in the way that you've just described? Which are the key tax incentives and new initiatives that you think are the most urgent and likely to be the most impactful?
Yeah, thanks Ming. So I think that is a very important question. Basically, given the government's lack of ability to pump prime, one way to basically encourage the growth on the private sector side is to basically do it through the tax incentive way. So there's one particular tax which we hope that it can be relooked into, which is the foreign source income tax. If we want Malaysians to bring their monies back to fund some of these potential investment opportunities, we should look at the FSI tax that we have committed ourselves to. Maybe we can relook at that. The other area is, if you look at for a company or for even an individual today taking loans, simple thing, right? You take loans if it's to be used for productive capacity, you have to pay stamp duty of 0.5% on the loan amount. We don't have this in the neighboring countries, but this is unique to Malaysia, and it increases the cost of borrowing and the cost of financing for companies. So that perhaps can be relooked into as well. And of course, in terms of other tax incentives, we can look at like if we want to move our workforce up to be more productive, we are aware that there's the progressive wage model that has been recently announced, although it's voluntary. So the question is, how do we make it enticing for companies to adopt PWM? And one of the ways is to provide tax incentive for companies to that adopt this, right? And so for CGS, for example, we will be open to doing that if
there's an incentive,
tax incentive, right, to do that. So it's win-win, right, for the people, for the companies, as well as for the government. Because if you look at the PWM, you're talking about basically raising wages in anticipation of productivity gains. So there's no guarantee that there will be productivity gains, but we raise the wages first. So, and it's voluntary, right? So giving tax incentive, that would be good. Other tax incentives we can consider are like obviously the more traditional aspects like R&D, investment tax, and also SME support, and even green energy incentives, and of course digital transformation incentives. So at CGS, we are actually spending tens of millions of ringgit in the next 3 to 5 years. For example, to go to the cloud, to do big data analytics, and to also renew our trading technologies. So all this requires a lot of investments into area of automation, but we don't benefit at all from these investments that we undertake. So if there is a tax incentive to provide to the industry, not just us, but generally to companies that go into the area of AI or automation, that would be an added incentive for companies to upgrade their processes or their systems.
Agreed. Yeah, I think on that note, actually, there's a small portion of that already in the market, right? I'm not sure if you're aware, where MDEC is giving out a digitalization grant for SMEs that are, or smaller companies that are looking to upgrade or improve their operations with digitalization and technology. So that's, in a way, a small part of the avenue that's already available.
Yep.
Any thoughts?
I think also to the point about tax incentive, right? It's easy to obviously ask the government give us more incentives. On the other hand, I think we should also look at fiscal consolidation, because the large budget deficit year in, year out since 1998 doesn't help in terms of allowing government to hit the space, the financial space, to put more monies into development and to do the things that they want to, right? So I think the government should consider bringing back GST. I know it's a very controversial subject, but it will be good for the country long term. And there is also a need to move away from tax regimes like capital gains tax, because if we want to encourage investors to invest in Malaysian growth, to fund companies in Malaysia, including the ones from ASEAN listed in Malaysia, we don't need capital gains tax. I think that would be a big negative for private capital owners. Yeah, and we should also obviously look at the removal of subsidies, as we spend too much on subsidies as a country.
Agreed. I think on the capital gains tax side, it's also something that in my own head that I've been thinking about. Right, whilst good that to not have it in order to spur more risk capital activity. At the same time, we're also in this kind of dichotomy where we're trying to increase taxes on the personal income side as well, but knowing that the salaries of Malaysian workers are not really that high, right?
Average is 2,000 ringgit a month.
So really, if the government wanted to kind of improve the fiscal position, the source of income is more likely to come from the capital side, or rather the corporate side, than the individual side. I'm not sure what the right solution here is. Hopefully we see something good in the next budget and the review of the midterm review of the RMK 12, right? Yeah. Maybe we move on to the following question. So the Madani Economy Framework has quite a few different targets and goals that they want to achieve, both short term and long term. Like some like you mentioned earlier about reaching the top 30 largest economies in the world. Also ranking top 12, I see, in the Global Competitiveness Index. What do you think the challenges are that we will face in implementing this framework, as well as the plans that come with it?
Yeah. A lot of our clients, including the ones from outside Malaysia, they would say that Malaysia has very good plans. I think we're not short of announced policies and plans, but clearly we can do a lot better on the execution side of things. So the Madani framework also talks about a whole of country approach to implementing the measures that contained in the framework. And so today, while the current ruling coalition has a two-third majority of the parliament, it would help from investors' point of view to perhaps consider a form of MOU between the government and the opposition to basically bring the opposition side in to tackling some of the very difficult structural issues that the country has. For example, tackling subsidies, finding new sources of taxation revenues, relooking at some of the policies to unlock growth potential, such as immigration policies or expat policies, right? I know that YB Rafizi has announced something to that effect, but there's a lot more that can be done, and it would help to basically have the opposition side on board for a more robust policy decision making for the country going forward. The other area is to improve the execution capability. Is when we look at the Madani framework, a lot of the goals basically cut across ministries. So even in a company like CGS, when we put down our specific goals, we realize that these things require the collaboration or cooperation between departments or divisions, and sometimes with our outside partners as well. So there is no way that one goal can be done by one or two departments. Same here. These goals are lofty goals, and they require a lot of coordination between ministries, and they also require accountability between the ministries as well. So these goals should not be covered or carried by, for example, just Ministry of Finance. They should be carried by the ministries that are affected by that goal. And importantly, the accountability should result in some form of mechanism for corrective steps to be taken as we measure how we progress, and as we take corrective steps even to adjust to changes that take place in the world, because we don't live in a static world. Things move very quickly. So I think in short, basically the Prime Minister's department, perhaps the PMO, could take the lead to coordinate between ministries, measure progress, and ensure there's accountability and a discipline mechanism to ensure that we get back on the right path. So I think execution is everything in this case.
Yep.
Yeah.
Yep. Agreed. As you know, like what you mentioned, very difficult to get different people to work together. Even if it's a close partner, right? I think maybe if you can share a little bit about what you think are good ways to get everyone on the same page and aligned to work towards the same goals. I think we see this a lot in all kinds of different plans, whether at the national level or within CGS or other organizations, right? It's always difficult to get everyone to really agree to working towards the same objective and then really executing down on that path.
It's a issue that all corporates face, right? And we have competing interests within a corporate, between departments. So there are goals that we can all agree on, and there are some goals that will probably require a lot more discussion and perhaps agree to disagree. And the big boss has to come in and say, okay, guys, this is the path we will take. This is the decision that we will make. Everyone, please fall in line. And this is for the good of the country or for the good of achieving the goal, right? So there will be a lot of coordination and conversation that needs to take place between the stakeholders. So if that discussion doesn't take place, that would be quite concerning, because people are not aligned. They may look at something and may think differently of it, think ill of it, and that is not a starting point at all. So very basic stuff, but it's the basic stuff that gets us all entangled, even from the word get-go, right? So don't talk about implementing this towards a goal, right? If you can't even agree on the goals at the first instance.
Yep, agreed. I think in my experience, it tends to boil down to trying to identify the commonalities that you share with the other parties, right? And then through that commonalities, that's how you build the common understanding and the rapport to get to the same goals. Do you think there are any other key challenges apart from execution? Do you think the plans are sufficiently the strategy or the approach in the plans are the right ones to take? Do we have the right resources?
Yeah, that's a very good question. I think in the past, Malaysia comes up with a lot of plans, some very bold ones, and apart from execution challenges, I would say also there is not enough focus on really going through the process of deciding what Malaysia as a country has in terms of competitive edge vis-a-vis our neighbors, right? So we can't be good at everything. We can be good with certain things, that, especially the areas that we are already strong in. And so we shouldn't spread ourselves too thinly. At the moment, the Madani framework, of course, it's there's a lot more flesh that needs to be given, specifically in areas and specific policies. I think we're waiting for that. And so it's important that the details have to come out. So the details is where we would like to see there's sufficient focus. And focus here could also basically be on areas that we don't want to work on, right? Or we know we're not going to be strong in. No point us putting resources in. So I think that needs to be cleared up. So the area which I mentioned earlier is on fundraising. And if you want to grow the economy to become top 30, that means we have to grow a lot faster than some of the economies that are above us. We are number 37, as I mentioned earlier. So Singapore is above us. Thailand is above us. Indonesia, of course, is way larger because of the population size. And that means we have to be more efficient. So I'd like to see, for example, how can we cut down our time to market in terms of when a new investment is intended to be made by the private sector, whether it's domestic or foreign investor. How can I get into the market, get things going faster than possible right now and faster than our neighboring countries, because everyone is trying to be more efficient, right? Especially like our neighbors here in ASEAN. So that's one. Two, how do we start attracting companies to consider listing on Bursa Malaysia, as opposed to some Malaysian companies are actually looking out?
Yep. Yeah, we've met many already.
To list outside rather than list on Bursa, right?
Yeah.
So we need to stop that, right? Or you can't stop that, but you can tell. Basically, my point here is that we have to make ourselves very appealing for these companies to list here. And then, how do we get overseas companies in ASEAN to list here?
What do you think will help kind of incentivize that? Because we do see a lot of Malaysian companies wanting to list in NASDAQ especially, right? And I guess the main draw of going to a market like that is usually the volume and the valuations that you can obtain there, right? So what do you think? How can we attract the Malaysian companies or the foreign companies to list here in Bursa?
Yeah. So there are companies that go to the US or to Hong Kong or to Singapore for various and sometimes specific reasons, right? So for a tech company where there are better comparables already listed on NASDAQ, probably makes sense to go there. However, geographically, if you operate within ASEAN or Asia and you go to the US, although you're operating in the same field, but geographically they may not understand the company or the industry as well as investors here. So they might actually end up giving you potentially a lower valuation, even if you go NASDAQ, right? So on that basis, then if we want to make Malaysia a hub for ASEAN listing, then we have to have better exposure of these industries that we want to attract from the investors based in Malaysia. And there are very large funds here in Malaysia, right? Notably the ones that are government linked. So they need to be given exposure in terms of how to look at a certain industry in the right context, right? Because they need to be able to value any companies, especially the new industries, the right way or a fair way, so that the list codes will think about, I can get a decent or fair valuation listing in Malaysia, as opposed to if I come here, people don't understand what my business is, they can't give me a right valuation, I'd rather go Hong Kong or Singapore for that matter, right? So the investor education at the institutional level must be there, and that's where we play an important role, CGS, because we have a regional expertise. We hold a lot of conferences for our clients. The other is Malaysia actually has a deep pool of retail funds as well, apart from institutional funds that I mentioned earlier. So if you look at our deposit size is about, in Malaysia, is about 500 odd billion US dollars. That's about 1.4 times of our GDP. And if you couple that with the clicks related funds, that would be about 300 odd billion in US dollars terms. So you add the two 500 and 300 billion together, it's actually 2x of the size of the economy. There's a lot of liquidity here. And so this is an area that we feel can be tapped into, and investments without too much fiscal priming by the government, we could actually get the kind of growth that we want at the GDP level.
Okay, I think then that ties back with the whole point on the earlier point about aligning interests, right? If the investors, the institutional funds or the retails, the guys who are holding those large amounts of deposits and capital, see value in companies that list here or investment opportunities in businesses that are fundraising here, then that capital gets to be used. The government's fiscal position is not as heavily impacted. at the same time there's a good growth story for the economy, and hopefully then translates to productivity gains and better salaries, right, for people around. On that note, since we're capital markets related, what are the kind of investment opportunities do you think you see arising from this framework? As an investor, where should we be focusing on? Where can we make the most or the best return?
I think Malaysia is in the right place. There are a lot of things happening around us, right? So I mentioned about geopolitics earlier, which basically trigger a multi-year trend. This trend is not a single or 2-year trend, right? So we've got offshoring, friendshoring, companies, foreign ones diversifying from China, setting up bases in Vietnam, Thailand, Indonesia, and we're seeing that happening in Malaysia as well, specifically in the semicon industry up north. We are also seeing Chinese companies basically setting up bases in neutral places in order for them to continue to trade with the US. I think the US, from what I understand, they're also not looking at completely zeroizing their imports or their trade with China. It's about diversifying, right? And especially in critical strategic industries of theirs. So ASEAN is in the right spot between the two superpowers geographically. And so we should make every effort and intensify our effort to attract these investments from US, Europe, and China to be in Malaysia. So we're starting to see that actually, and so that we expect a lot of fundraising opportunity in this space for the next 3 to 5 years. The other area that we see a lot of potential for Malaysia is actually, funny enough, in the infrastructure space, because although Malaysia actually has one of the best infrastructures in the region, barring Singapore. Singapore is a very small place, city-state, right? But as a country, Malaysia ranks up there in terms of our infrastructure compared to our other neighbors. So we have to look into, for example, our railway networks. We are underinvested in that area. So I know that there's, of course, ECRL. There's talks of HSR being restarted. I think that should be looked into not merely as a transportation project, but that could bring two markets closely together, potentially even 3 markets, not just Singapore and Malaysia, but even Thailand up north and Malaysia. And of course, Thailand is connected to Indochina. Big opportunity there. And in terms of just not about movement of goods, but movement of people. And in that regard, you can basically tap on the movement of people to bring wages up for Malaysia, between Malaysia and Singapore, just by having this HSR. So it's big opportunity there. The other opportunity in terms of infrastructure is also in the alternative energy space. So we all know that there's NETR being announced recently, and this is real because in order to maintain our competitiveness in the global market, we have to source green energy. And Malaysia has lots of solar resource. With potentially, we could also look at hydropower, biomass, and so these are areas that require a lot of investment. So lots of opportunities. And back to my earlier point, funding will be very much required to fund a lot of these investments.
So a lot more better, I guess, storytelling and narrative building in order to excite the
Yes. We are actually quite positive on the outlook for Malaysia, and it can be even better if we get our policy execution right, as we've discussed earlier. And that will really unlock a new wave of foreign investments into Malaysia, including portfolio investments. There's one area which I've not touched on, and is in the area of portfolio investments from China. We have good connections with quite a number of Chinese fund managers, and these are very big ones. And fund managers we've met, many of them are very large as the ones in the US or Europe. For example, last year we brought 5 of them to Malaysia. Collectively, their assets under management was 8 trillion renminbi. Huge. And many of them, in fact, none of them have invested in Malaysia or ASEAN for the matter. They're very familiar with Vietnam because of offshoring from China by their domestic as well as their foreign investors. But ASEAN not familiar. Malaysia, apart from durians, maybe the occasional holidays in our beaches and all, not that familiar, especially for the investors there. So imagine the kind of upside we can unlock if we can get them to start investing in Malaysia at the capital markets level.
Yeah, agreed. I think and we do share a commonality with them with a fairly large Malaysian Chinese group here in the country.
We are one of their largest trading partners. In fact, ASEAN is China's largest trading bloc on the export-import side, and China is in fact our largest trading partner for Malaysia. So that's on the non-capital market side of things, and certainly capital markets were nowhere there yet.
So you mentioned about semiconductors quite a few times already. Maybe we do a little bit of a deep dive into that sector. So in a recent article in The Edge, or rather recently in The Edge, on August 17th, CGS-CIMB did have an article in there that labeled the semiconductor industry in Malaysia as unappealing, and this this is contrary to the research, the HSBC's research team's report in the same news on the same day, where they said that the semiconductor industry is promising. Care to share the thoughts on how you guys view this sector?
I think our research takes the short to medium term view in terms of valuation as well as the current down cycle that is happening on the semicon front. So it is by no means a view that is relating to the longer term outlook for semicon industry in Malaysia. So as a long term view, we know that the industry is moving up the value chain. There are companies now doing designing of chips, and we're not just merely doing testing and assembling of semicon. We're moving up, as I mentioned, to design and to more advanced equipment testing and so on and so forth. So we would see a lot more new listings coming up in this space in the next few years. And at the same time, we should see, hopefully, the market share that we have in the global semicon market expand from currently 7% to, I think the target we're looking to achieve is 15% in the Madani framework. So I don't think there's any disconnect between our research view as well as what is happening on a secular long-term trend that we see in Malaysia.
I understand. So potentially a good buying opportunity over the next 2 quarters, right?
Yes, as the prices come off. Yeah. Obviously, you also need to look at the players that would benefit from offshoring, friendshoring, arising from the geopolitical tension.
Yep. I think on that note, perhaps more pertinent question would be, I think semiconductors on many countries' agenda today, right? Especially since the whole US-China trade war, the rise of AI in the past 1 year, generative AI, which has propelled NVIDIA to very new, unbelievable heights. But with all that on people's minds, governments' minds across the world, I think also, for example, America has introduced the Chips and Science Act, which they intend to spend something around the range of $280 billion over the next 10 years to catalyze their local semiconductor industry. Whilst it's a key sector for us too, key focus area for us too here in Malaysia, how do you think we can kind of play within this industry vis-a-vis the competition that we face from other key economies around the world, who also have this industry on their as part of their key focus?
Yeah, thanks for that question. So I understand that with all the big investments going into the US, they are looking at the global semicon market share of about 17% at the end of 10 years. So they've got a lot to catch up. Obviously, with a lot of money going in, the chance of success looks good, barring, of course, again, it boils down to execution and all that. So in the case of Malaysia, we need to engage, not just the current Chinese companies that are also looking to spend a lot on semicon, invest a lot in semicon. We also need to engage the US and the Europeans as well. So the good news is that I understand there are some new investments coming into Malaysia from these three geographical regions. So we need to relook at our policies with regards to supporting additional investments from these countries, particularly our tax incentives, and how easy it is for us or for these people to hire foreign talent, right? Which is back to my earlier point about immigration policy. Maybe not the immigration in the sense of giving them a PR or anything like that, but basic policy around foreign skilled, highly skilled labor into the country. So we need to do better than what our neighboring countries are doing. So we need to be super competitive there. So it helps if we can compare ourselves with them and see how we can bring ourselves to a much better and more efficient platform to bring these investors in.
Got it. I think so. Perhaps on the talent side, right? One of the matters addressed in the Malaysian Education Blueprint, which was established in 2013, is to actually reach a 60% ratio of students pursuing STEM subjects as their major. And this, I guess, the intended outcome was to be the supplying the key skilled labor for industries such as semiconductors. However, despite investing all this money and capital, as well as having the blueprint plan in place, the percentage of students studying in STEM has remained stagnant in Malaysia. Why do you think there's a lack of emphasis in trying to continue to grow this STEM talent pipeline, in addition to attracting, of course, foreign skilled labor?
Yeah. So I understand that the current ratio is about 48% of students pursuing STEM subjects, compared to our target of 60%. So I think anecdotally, in terms of, for example, areas such as wages, the wages of workers in the STEM area are actually lower than the levels we've seen in neighboring countries, or more advanced economies, obviously. And even in comparing these industries to from the financial industry, the finance industry, right? So I suspect that a lot of it is because we have this low wage problem in Malaysia, which is made worse by the high number of unskilled foreign labor in the country. And we all know that there are real attempts to basically move the minimum wages up and move the overall wages up with PWM. And we're also looking at obviously other areas such as moving the value chain up in our manufacturing industries and so on and so forth. So I think in time to come, if we can get that part fixed, making the wages more attractive, we can see more of our STEM graduates, instead of working in other countries, they should return to Malaysia to work in Malaysia. That is a function of having good paying jobs, and not just that, attractive employers or industries to work in where they can see clearly that they can do exciting things, right, in cutting edge things, and they can move up the pay scale quickly. So what we talked about earlier should, in a feedback loop, result in more students wanting to go into STEM, and then we get more talent pool domestically. So you need to create the demand. So you can't create a supply in the students without addressing demand.
Correct. Yep. Yep. So how do you think that we could catalyze such demand though? Is it attracting big name companies like Tesla to?
That's one. And obviously big names would help fire up people's imagination, and it creates the ecosystem that I talked about earlier. So one of the things which was done right some years back is basically getting Geely into our national automotive industry, and of course they are a shareholder in Proton, and they've since driven Proton to greater heights, and we've seen new investments coming into Tanjung Malim and all that, and that actually enables the ecosystem, the vendors, including local ones, supporting Proton to be able to do more exciting cutting edge stuff, right, as they go into EV and all that. So the same goes with other industries that we want to deepen our expertise. We need foreign investors, and we also at the same time need the domestic players to come along.
Hopefully those large foreign players will take the leap of faith and offer better packages to potential returnee Malaysians.
Oh, I think that will take its ordinary course of action as we improve the overall wage level of the country, and as we get more investments in. There's so much that can be done. So much.
Maybe it should be a requirement for them to onshore here.
Yeah. Why not?
Yeah. Okay. Moving on to the next question. With the rise of, we'll talk a bit more about AI and digital adoption now. With the rise of AI and digital adoption improving operating efficiency, how can the government create more quality jobs for Malaysians and phase out foreign workers? Some argue that Malaysia requires structural labour reforms. I think this ties back to the earlier point you made about having low-wage foreign labourers working here. Do you think there is enough incentive for the businesses who are benefiting from this low-wage labour force to change this, to be part of this change?
Yep. So I think we covered some of this before, like providing certain tax incentives for investments into automating processes, so people can then move away from the manual, laborious task to more value-added tasks. So we are doing that as a company in CGS. And other areas such as improving the movement of people with not just highways. Highways these days are clogged up with cars, right? Mm-hmm. But with railway, high-speed train. And we all know many Malaysians work in Singapore. And Singapore's cost has really risen a lot in the last 1 or 2 years post-COVID.
Yep.
And there's a lot of advantage that people could have by, for example, moving from working in Singapore to Malaysia, where the cost of living, cost of owning a property, cost of buying a car is much lower than in Singapore. So your quality of life goes up. You may not earn as much as in Singapore, but you gain in terms of the quality of life. And with more career opportunities in Malaysia through investments, we're just moving up. Hopefully cost of living coming under better control. There's a lot of potential to basically tap this skilled, highly skilled labor force in Singapore. And it could be beneficial to Singapore as well, right? Because that would help alleviate the inflation that they see there, and to move some of the industries that they have, which are perhaps no longer competitive to be based in Singapore, into places like Johor, or even down south, Negeri Sembilan or Malacca, and maybe to some extent even to KL, right? So if we do that, you upgrade the skill sets of people, and that also delves in nicely with the PWM. And overall, you could see the adoption of technology, AI, and as a result, wages could move up. So this is an area that we should look into. And of course, this, as I mentioned earlier, begins with making the movement of people easier between Singapore and Malaysia, for instance. So what are some of the things we can do there? RTS is happening. HSR, if it comes through, that will be another catalyst. And making the process easier for people to be hired out of Malaysia, right? And we could be talking about not just Malaysians working in Singapore, but also foreigners who are in Singapore. And I do know of a number of people who are actually quite keen to be based out of KL from Singapore.
I mean, it's everyone's dream to have a Singapore salary and work from KL, right? Better cost of living. But maybe just on the note of the progressive wage, right? It's in a way it leads to increased costs for businesses in order to run their business. And do you think that this then discourages them to kind of invest further into the country, or put off FDI from potential investors coming here to Malaysia?
I don't think so. I think it's high time that we move away from the low value aspect of the industries that we are in. We can't be operating at such low wage levels, and we can no longer be competitive in that area compared to other countries that can probably do better than us, and certainly countries that have a much larger domestic population, right? So we don't have that, and we need to move away from that, and we need to be more productive rather than just focusing on keeping our wages low and getting more people to work and all that, right? So interestingly, when we look at the data, the growth of nominal GDP, the last 10 years versus the growth of wages, the growth of wages has actually lagged against the growth of nominal GDP the last 10 years. So no wonder people talk about still earning 2,000 ringgit, right? And property prices have gone up 2x during that period. So we need to move away from that, and we have to do this fast, and at the same time work with the employers closely, because they are obviously a major stakeholder in this. We can pay better, we can retain the talents here in Malaysia, and we can get the productivity levels up through modernizing our processes, how we work, going into automation, going into adopting new technologies such as AI, cloud, and new markets as well, looking at markets much larger than Malaysia, outside of Malaysia, where we can support them out of Malaysia.
So I think sounds like the Madani Economy Framework is pretty well thought out approach or plan, and really it boils down again to the execution of the plans, which we've had many different iterations of plans over the past years.
Yep.
I think that takes us to the end of the discussion on the Madani Economy Framework. As part of the closing, we do have a few standing questions that we usually ask our guest speakers.
Sure.
The first of which is, if you could invest in any or start any business or industry, regardless of current market trends, and assuming you had all the money in the world, what would that investment be and why?
That will be in the renewable energy space for me, because from the NETR that was announced, the National Energy Transition Roadmap, something like 500 billion to 1 trillion ringgit of investments is required in that period. So we need to obviously move away from our reliance on coal and traditional sources of energy to power our country, industries and all. So there's lots of opportunities in terms of tapping onto solar energy, biomass, and even hydropower. So on the pretext that I've got all the money in the world, can raise whatever funds that I need from Bursa and all that, that is the industry I would go into, and with good returns as well, I believe, because a lot of Malaysian companies are actually looking into that area, and there's no shortage of buyers of renewable energy.
I think that's a good one to be in, especially because climate change is real, right? We've already moved up 1.5 degrees Celsius compared to 50 years ago. If we don't slow it down, or we don't change how we do things, the world is probably gonna be too hot to live in the next 30 years. So good to be in that space. Second question. What do you consider a must-read book or must-listen podcast for those interested in the Malaysian startup landscape? Not sure if you...
I will talk about a book that I've read some years back, and it still leaves a very strong impression on me after so many years, and that's the book by Dan Senor and Saul Singer. The book is Startup Nation, about a particular country in the Middle East where it practices a very unhierarchical environment where creativity and intelligence is highly valued, and at the same time there is also a rather aggressive immigration policy that they practice, which allows for movement of talents into the country. And that particular country also practices compulsory military service. And in that environment, you have basically people being put on the same level. There are no hierarchies to solve a problem. And they use a lot of creativity because the resources are limited, small country. So that in itself fosters the ability for people to speak up, to solve problems on the fly. And this is practiced in real world, in organization at all levels. So we see that happening in startups right today, even in Malaysia, where people dress casually. They don't go by your traditional titles like CEO and whatnot, right? In some cases, and no issue with the freshie speaking to the CEO in a startup environment to solve a particularly difficult problem. So at CGS, we practice that to a large extent because our hierarchies are are also very much streamlined. We don't have multiple layers of people, and we value solving problems on a team basis and taking the view of the client when we look at problems, and not just looking at it from a corporate organizational perspective, right? So that's very, very important for anyone wanting to start a new business. Yeah, there needs to be certain values that need to be very much inherent in to ensure there's a high degree of a higher chance of success.
Yeah, agreed. I think a kind of a value or culture of questioning or challenging existing norms is important.
That's right.
Right? Yeah,
That's right.
Otherwise, you'll just be stuck doing the same thing over and over again.
Correct. Absolutely.
Last question that we usually ask: what advice would you offer to aspiring entrepreneurs in Malaysia?
Well, I will use my company's acronym, or rather my company's name as to talk about that. CGS, right? It's an acronym that stands for C, customer centricity. G, grit as in GRIT. S, sustainable. So on customer centricity, for a aspiring entrepreneur, never forget that any business that we start or we run is to fix a problem. The moment you can't fix a problem, you're out of business, or you have no business to be in business. Grit, we need to persevere in the face of challenges. There will be no shortage of them. If there are no challenges, then time to move on, or that business probably has matured, probably going to a steady state and on a decline. As sustainable, in this current environment where ESG is real, so being sustainable in all that we do for people, planet and purpose is very important, so that we do good to the country, do good to the people, and ultimately to the planet. So I think with that, then we can hold our head high, and we know that we're doing not just to make money, right? We're doing for the betterment or for the good of the wider society.
Yeah, good. Thanks for that message. Very heartwarming one. And on that note, I think that concludes our this session of the Long Game podcast. Thanks again, Alan, for being so graciously being our guest on today's show.
Pleasure. Yeah, thank you, Ming.
Thank you.
Thank you, Penjana Capital as well. Yeah.